Hi everybody, Tom Guile, the Guile Group. There's been a lot of talk over the last year about the pandemic's impact on the housing market. While it's true the pandemic really did impact people's desires for larger homes with extra living spaces to work from home and recreate, the underlying issues driving the prices and demand that we're seeing today really have been years in the making. So let's take a look at what's really driving the market and then my opinion of where the market's going to head from here. So one of the big factors driving the current demand in the market is the ultra low interest rates. And we've been talking about this for over a year now, but this graph does a great job of just showing where rates are today compared to where they've been historically. You can see back in the early 1980s, rates were over 15%. Today, they're still under 3%, which is an amazing rate. It's really driving people into the market right now. Another big factor driving the market is changing demographics, and this has been shifting for a number of years now. But we're at a point where millennials, the largest U.S. demographic for home buyers, are at their peak home buying years. At the same time, the boomers, the second biggest generation, are aging in place as opposed to stepping down into smaller homes. So this is creating a lack of homes for people to move up into as the boomers aren't moving out. A third big factor is lack of construction, and this has been going on for over 10 years now. The construction industry was hit really hard with the downturn in 2008. They found it really hard to obtain funding. As a result, new construction really lagged in the 2010s and we're far below where we really need to be. There's an interesting stat I came across yesterday. It said that there were 65,000 starter homes built in the U.S. last year. That's nationwide, 65,000. That is 1/5 the level of starter homes that were typically built in the 1970s and 1980s. So take these factors, add in Oregon's extensive land use planning laws and urban growth boundaries, and we have the perfect storm. These graphs do a great job of illustrating that. In May, inventory was down at an all-time low of 0.7 months across the metro area. That low inventory and lack of supply is driving house prices up, as you can see here, and it's been a pretty steady climb since last summer, with May topping out at the median home price in the metro area of $550,000. But given all this, I think there's some clearing on the horizon. In the last 4 weeks, we've seen listing activity at levels higher than they've been since July of 2019. We're starting to get some relief on new construction, with lumber prices coming back down after hitting a peak in May. We're starting to hear about fewer multiple offers on properties, where we were hearing of multiple offers of 5 and 10 or even more offers on a property. I'm talking to agents now, and we're seeing it also firsthand. We're getting 2, 3 offers on a property. And we're starting to see some price reductions as homes sit on the market that may have been overpriced. I think this quote here from Harold Fairweather sums it up really well and where we're at right now in the marketplace. In the last couple of weeks, things have slowed down a little bit. It feels like we're reaching the peak in terms of how competitive the housing market has gotten. People are kind of burned out. This summer won't see things as absurd as things were in the first half of the year. I totally agree with that quote. So here are my predictions of where we're going to be at for the second half of 2021. Overall, I think the market's going to remain very competitive. It's still going to be a seller's market, but I think it's going to cool off a little bit from what we've seen in Q2. I think interest rates are going to tick up a little bit, although the Federal Reserve has been very active in buying debt back to keep rates low. I think it's going to tick up to about 3.5% by the end of the year. I think sellers are going to continue into the market at higher numbers, and I also think buying is going to remain competitive, but not at the levels that we saw in Q2 of 2021. Want more information on the market? Or better yet, what is your opinion? I'd love to hear from you about it, so reach out to us at AskGuileGroup at guilegroup.com or give us a call. Follow us on social media.